how are we doing when we talk about all these metrics as they relate to diversity, equity, inclusion and the environment at an exchange level, at a corporate level? How is this region performing?
Well, if I look at Singapore, you're performing extremely well, since 99% of your listed companies already use the GRI standards, which is quite impressive. So in the region, I would say the average uptake is around 70%. If you look at the global uptake of our standards, 78% of the Fortune 250 uses the GRI standards, and around 66% of the 5,500 companies below the Fortune 250.
I have to ask, the companies that don't use GRI standards, why don't they?
GRI is a voluntary standard. And some are not that far in their thinking than to voluntarily take up the challenge to report for a wider public their impacts they have on the environment and society. But the companies that do, and there are more than 11,000 multinationals worldwide that do, they even go a step beyond the voluntarily reporting. 40% of them is effectively also onboarding external assurance, limited or reasonable assurance on those reports. And I think that's quite impressive, because showing that you are willing to voluntarily use our standards is one step, but then also investing in external assurance on top of, that's really something. And I think that's also one of the reasons why we see now in the regulatory environment, we have in Europe now a system whereby reporting on impacts becomes mandatory from financial year 2024.
Is the message getting through to corporates in this region that this isn't PR, this isn't a box ticking exercise, this isn't quota checking, this is good business that generates a return for investors?
Absolutely, that is absolutely the case. It is what you typically see, is that large investors and large fund managers are pushing towards more transparency on impacts, because effectively it's more about long-term risk management than anything else. We see the issues around global warming, socio-economic unrest. They can be very destructive for company value. So your vision and your strategy in mitigating those risks on the longer term is quite important. Besides, we see with all the green indexes and the green bonds that your cost of entering capital markets is lower when you have a, let's call it, sustainable strategy in the core of your business strategy and report on it in a transparent, comparable way than if you have not. So it is about data and business transformation, and it's an integrated part of doing modern business.